Welcome to Stock Pro Gist. Today we are talking about how to buy U.S. stocks from anywhere. If you are new to our channel, we encourage you to subscribe, like, and share our videos. The U.S. stock market is a global giant, attracting investors worldwide. Whether you're seasoned or just starting, this guide simplifies buying U.S. stocks from any corner of the globe. Understanding your options. There are several ways to gain exposure to U.S. stocks, each with its advantages. Direct investing. This grants you ownership of individual company shares. You'll need a brokerage account with a U.S. registered firm like Charles Schwab, TD Ameritrade, or Interactive Brokers. ADRs/GDRs. American Depositary Receipts, ADRs, and Global Depositary Receipts, GDRs, represent shares of foreign companies traded on U.S. exchanges. They offer a convenient way to invest in U.S.-listed foreign companies.
Mutual funds and ETFs. These pooled investment vehicles hold a basket of stocks, including U.S. companies. Mutual funds are actively managed, while ETFs track a specific index. They provide diversification and potentially lower fees. Choosing the right broker. International availability. Ensure the broker accepts investors from your country. Some popular options cater to a global audience. Account types. Brokers may offer individual, joint, or custodial accounts. Select the one that aligns with your investment goals. Fees and commissions. Compare fees like trading commissions, account maintenance charges, and foreign exchange conversion rates. Investment minimums. Brokers may have minimum deposit requirements to open an account. Funding your account. Wire transfer. This is a secure but often fee-intensive method. ACH transfer, U.S. bank account required. This is a cheaper option for those with a U.S. bank account. International payment networks.
Tax considerations. U.S. tax implications. Non-resident aliens may be subject to U.S. withholding taxes on dividends and capital gains. Consult a tax advisor for specifics. Local taxes. You might owe taxes on investment returns in your home country. Navigating the regulations. KYC, know your customer. Anti-money laundering regulations require brokers to verify your identity and residency. FATCA, Foreign Account Tax Compliance Act. This U.S. law requires financial institutions to report account information of U.S. citizens or residents holding assets abroad. Investing wisely. Conduct thorough research on the companies or funds you choose. Develop an investment strategy that aligns with your risk tolerance and financial goals. Consider factors like currency fluctuations and geopolitical risks. Invest gradually to build your portfolio and gain experience.
Finding the right brokerage account. Online broker reviews. Explore review platforms or financial news websites to compare brokers on factors like fees, account features, and international client support. Look for brokers with fractional shares. Some brokers allow buying fractions of shares, making it easier to invest in high-priced stocks with a smaller budget. Consider mobile app availability. If you prefer mobile trading, ensure your chosen broker offers a user-friendly mobile app. Staying informed as a global investor. Financial news websites. Subscribe to reputable financial news websites or apps to stay updated on U.S. market trends and company news. Look for publications with international editions or multi-language support. Financial podcasts and webinars. Explore podcasts or webinars from U.S.-based investment firms or financial advisors. Many offer insights and analysis targeted towards a global audience.
Annual reports and filings. Publicly traded U.S. companies are required to file annual reports and other documents with the U.S. Securities and Exchange Commission, SEC. Access these through the SEC's EDGAR database, https://www.sec.gov/edgar for in-depth company information. Additional considerations. Currency hedging. Fluctuations in exchange rates can impact your investment returns. Consider currency hedging strategies to mitigate this risk. Time zone differences. U.S. stock exchanges operate on Eastern Time, ET. Be mindful of the time difference when placing trades or monitoring real-time market movements. Language barriers. Some broker platforms might not be available in your native language. Look for brokers offering multilingual support or customer service options.
I hope you have enjoyed our video for today. If you have not subscribed to our channel, please do subscribe, like, and share our video to enjoy more updates. Remember, investing involves risk. This guide provides a starting point, but it's essential to conduct independent research, understand your risk tolerance, and potentially seek professional financial advice before making any investment decisions. Thank you for watching.